Okay, so we got to the year 2002, right? But I think we have done the assessment of the previous years, seen what to do when they bought or when they buy, and then what to do when they sell. So in 2002, if we do the checks, 2002, they didn't buy and they didn't also sell. So it means that we have to balance and move to 2003. So 31st December 2002, balance carried down 25,000. And then it will come to 1st January 2003, balance brought down 25,000. Good. So in the year 2003 or 2003, well, we have information that they bought an asset. That's the second delivery van. And when they buy, we debit. Let's also check if they sold. And I think one of you should do that check for me. Did they sell any asset in 2003?
No, please.
They didn't sell any assets?
Yes. They sold an asset.
They sold an asset. Okay, which asset was that? I think this one, right? The delivery van.
The first one.
Yeah, year out 20. Okay. So it means that in 2003, they sold and they also bought. So when they sell, we'll credit. When they buy, we debit. So we can do the buying first. That's the debiting first. And they bought it on 1st January 2003. So bank. And we can add the label. This is AS 8801V at a cost of 28,000. Okay, so they bought, so we have debited. Again, they sold, so we have to credit, right? So in 2003, we go to the credit side. They sold it on which date? December 31st. Okay, so 31st December 2003. And when they sell, what do we use? We use disposal. So you credit with disposal. Again, what value do you put there? The cost of the asset that has been sold. So delivery van year out 2200B, the cost was how much? 25,000. So that's what you use to credit. And that's all. You balance and go to the next year. So let's do the balancing. I think we have 5325. So the total will be 53,000. And the balance carried down will be 28. Okay, so total. Okay, so let's put in the balance carried down. 31st December 2003, balance carried down. That will be 28,000. Then we bring that down to the next year, 2004, 1st January 2004, balance brought down 28,000. So we are now in the year 2004. We go and ask ourselves, did they buy? If yes, we debit. Did they sell? If yes, we credit. So 2004, yes, they bought, right? On 1st July 2004, they purchased another delivery van. So we are going to debit that one. 1st July 2004. Bank number JR 7502W. In fact, if you don't bring this labeling, you will not be penalized or you will not lose any mark. But equally good that you do it. Okay. So we have debited because they bought. Now they also sold. We have been told they sold the second asset on 30th June 2004. So it was still 2004. So we are going to credit that 30th June 2004 disposal. We are using the cost of that asset. So asset 8801 had a cost of 28,000. Then you balance it and move on. So you see, it's very, 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 very simple if you just stick to the rules. Okay, so the carry down would be 31st December 2004, balance carry down, that is 32,000. So this one we brought down to the next year. First January 2005, balance brought down 32,000. At this point, 2005, let's see what happened. 2005, nothing happened. 2006, nothing. 2007, nothing. So the year would continue, sir. So we end here 2005. And that is your asset account. Very simple. Any question on the asset account before we skip or we move into the provision for depreciation account? Any question? So whether you have watched the videos, whether you were in class the other times or not, if you are preparing the asset account, take the thing year by year, begin from the first year. If they bought any asset, debit it. If they sold any asset, credit it. In both cases, use the cost of the asset. Okay, then you balance the year with your carry down, brought down, move to the next year. Ask yourself the same question. So the asset account, if for nothing, if this should come to an exams and you do the asset account, that is half, almost half the mark, or 6/15, even 5/15 is better. Okay, so please get all the marks with the asset account. I beg you. I'll pause for questions if there is. Yes, Amma.
Sir, please, although we didn't buy or sell in 2005, but the question says that we should prepare the accounts for the year ended December 31st, 2000 to 2005. So do we have to also balance it for 2005?
Okay, so you are required to do the following years and that. Yes, I think I agree. Yes. Okay, so there was that note here that prepare the following account for the years ended 31st, 2000 to 2005. Okay, so it means we have to balance 2005 to yes. That is a good one, you see. So thank you for that prompt. So if you didn't do this, you are going to lose, I think, a tick or something. Wow. Okay, so we balance off 2005. Balance carry down 32,000. Okay. So 1st January 2006. Well, you can decide to end with the carry down, but equally you have to bring the brought down if you are putting in the carry down. And that is it. So thank you for that prompt. Very good. Any other prompt or suggestion or contribution or questions? Okay. Yeah, Amma, go ahead. You have a question, go ahead.
Oh, no, please.
Okay. Okay, so it is my belief that each and every one of us here, if for nothing, can prepare the asset account with ease. Okay, Let's move on to the provision for depreciation, which tends to be the stubborn account we have to prepare. But again, so provision for depreciation account. Okay, so for this one too, the principle is simple, right? Go and calculate it at the end of the year and credit it to provision for depreciation account. So the first thing you have to do is to calculate it. Do the calculations year by year. So start from the first year. In this question, our first year is the year 2000. So 31st, remember we are calculating depreciation at the end of the year. So end of the year, which is 31st December, as given in the question. So the first year is 2000. So the year 2000, let's do the calculation. What do you have to do? You need the assets that were in that particular year. So let me find out. If you go through this question, which asset was there in the year 2000? I think the gentlemen are not talking. Wow, the gentlemen. Are you scared of the ladies? Prof. Joel, what asset was in the business at the year 2000? Prof. Joel, we are waiting for you. Prof, we can't hear you. Well, because of time, let me pick Kenton. Prof. Kenton, can you assist us?
Sir, please can you hear me?
Yes, it's very clear now. Okay, so which asset was in the year 2000?
Okay, sir, please, the delivery van, ER2200B.
Okay, so ER2200B. Okay, so we have to calculate depreciation on that asset. And the policy says 20% per annum on cost, right? So the rate is 20%. So we multiply the cost, which is 25,000, by the 20%. And don't forget your two policies. It says full year depreciation is charged in the year of acquisition. So in the year you buy the asset, you charge full depreciation. So 20% of 25,000, what are we getting? Because of the time, I would wish that you can do the responding very quick. 20% of 25,000.
5,000.
Okay, so we're going to get 5,000. And that is all. Because in the year 2000, this was the only asset that was there. So you have gotten your depreciation. You go into the depreciation account and you credit it. Okay, you credit it. What date would you use? The closing date, 31st December 2000. The narration is profit and loss. Okay, profit and loss. You put the amount there, 5,000. After that, you balance it and go to the next year, 2001. So let's balance this quickly. 31st December 2000, balance, carry down 5,000. This will come down. 1st January 2001, balance brought down 5,000. So you are now in the year 2001. Then you go and calculate the depreciation for the year 2001. So we ask ourselves again, 2001, which assets were there? It will still be the ER220B because the other assets came in, I think, 2003. So 2001 to it will be the same assets, ER2200B. So we are going to have the same 25,000 times the 20%, giving us another 5,000 again. So you go in there and credit 31st December 2001, profit and loss 5,000. Then you balance it and go to 2002. So let's balance. The total will be 10,000. Our balance carried down 31st December 2001 will be 10,000. And this will be brought down to the next year. Okay, so 1st January 2002, balance brought down 10,000. Then you go again, 2002, what assets were there? You do your calculations. So again, 2002, I think is the same ER. Wow, this question is very interesting. ER2200B is the same asset that is there. So 25,000 times 20%. Going to give us the same 5,000 again. So you go in 31st December 2002, profit and loss 5,000. Then you balance it and move to. So it's very robotic and very simple if you know what you are doing. So let's balance it. I think it will be 15,000. 15,000. So they carry down 31st December 2002. Balance carried down is 15,000. Then it will be brought down 1st January 2003. Balance brought down 15,000. Here comes 2003, which has a lot of information we have to pay attention to. Okay, so let's do the calculation for 2003. So we ask ourselves, the year 2003, what assets were there? And here I'm going to need your assistance because I'm not alone. So 2003, is the ER2200B still there in the business? The question is, or the answer is, it was sold 31st December. So it was there from January to 31st December. So it was actually there. But the policy says that no depreciation is charged in the year of disposal. Okay, so this asset ER2200 was sold in 2003. So for 2003, you won't charge any depreciation on it. It's zero. So that's the essence of that policy. No depreciation is charged in the year of disposal. If that policy was not there, we would have acknowledged that, oh, this asset was there from January, February, March, up to even December, 31st December. But the policy overrules all that. So it means that ER220B would not get any depreciation for the year 2003. Please, any comment on this? Is it good with us? Okay, I want to believe so. So it means ER will not take any depreciation in 2003. Let's check another asset that was in the year 2003. And the answer is this one. The 8801V was bought in 2003. So it would attract depreciation. So AS 8801V. So we have to calculate depreciation on that. That's 28,000 times 20%. And that should give us how much? I think 5,600. Please confirm the figure. If it's wrong, prompt me. Okay, so apart from the AS, was any other asset due in the year 2003 for which we have to calculate depreciation? The answer is no. So it means 2003, this is the only depreciation that we have to charge to profit and loss at the credit side. So 31st December 2003, profit and loss, 5,600. But remember that an asset was sold in 2003. And we all agreed that if you sell an asset, you have to debit this account with the accumulated depreciation on that asset. Now, for those who are not with us during those times, I'm going to repeat it again. All you do is you calculate the depreciation and you credit in this account. But anytime they sell an asset, so for a particular year they sell an asset, in this question, they sold the asset in 2003. So 2003, we need to do a debit. We debit with accumulated depreciation on the asset that has been sold. By that, I mean this asset ER2200B Omatoi. Depreciation send ye charge so far. That's the accumulated depreciation. Add all of them together. So that is equal to ER. You charge a first one with 2,000. So that's the 5,000. We add on. We also charge another depreciation in 2001. So we add on another 5,000. Then we add on the last one. So 5,000 plus 5,000 plus another 5,000. So we are going to get an accumulated depreciation of 15,000 on that asset. So when you get that accumulated depreciation, debit it in the year that that asset was sold. So the asset was sold on 31st December 2003. So we debit with disposal 15,000. That's all. So you balance and go to the next year. I'm expecting some questions. Please, if you do, ask me. I beg you. If you have questions, ask me. If you want me to take the point again, let me know. Okay. So let's balance it. I think we'll have 21,600 as the total. So the difference is 5,600. That's the balance carried down. 1st December 2003. Amma, do you have a question?
Please, it's 20,600.
Okay, 20,600. Thank you for the prompt. Thank you. Okay. Okay, so the 5,600 carried down would now be brought down to the next year, which is 1st January 2004. Balance brought down 5,600. So we now go to 2004, also do the calculation of the depreciation. So we ask ourselves again, which assets were there 2004? The first asset has been sold, so it's not there. The second asset, which is 8801, it was sold in 2004, but 30th June. So in any case, it was there January, February, March, up till June. But do we have to charge depreciation? The answer is no, because the policy says no depreciation in the year of disposal. So the asset was disposed on 30th June 2004. So 2004, that asset too will not get any depreciation, right? So if we check, this 7502 was bought in 2004. So that one will get depreciation for the year 2004. So JR 7502W, the cost is 32,000 times 20%. But pay attention here. If you check the date the asset was bought, it was bought on 1st July. So in any case, in 2004, this asset was only there for July, August, September, October, November, December, 6 months, right? So we would have multiplied by 6/12. But this policy here, a full year's depreciation is charged in the year of acquisition. So in the year they bought the asset, you charge full depreciation. You don't do any times 6/12. Okay. So here, even though the asset was bought in July, we still charge full depreciation for the 12 months. So 32,000 times 20%, I think that's 6,400, right? So I want to believe you are getting the understanding of the policies. So 2004 too, this is the only depreciation we have. So we go and credit. After that, we have to debit because they sold one of the assets in 2004. So 31st December 2004, profit and loss, 6,400. So we have done that. And then they sold the second asset, which is AS 8801V. So we need the accumulated depreciation on that asset so that we can debit it to clear. So we need accumulated depreciation on that asset. So if we check, it's just this one, right? Just the 5,600. Accumulated depreciation on asset AS 8801V is only 5,600. So that's what we debit in that year. The asset was sold 30th June 2004. So disposal 5,600. And we balance it and move to the next year. So we would have, I think it's 12,000. 12,000. So the carry down 31st December 2004. Balance carry down is 6,400. Okay, we bring it down 1st January 2005. Balance brought down 6,400. And again, since the question told us to prepare the account to 31st December 2005, we need to acknowledge and do that. So it means that 2005, we have to look at any depreciation we have to charge. So 2005. The question is, what assets were there? The only asset that will still be standing is the GR75W. So GR7502W. because we had not sold that asset, so it will still be in the business. So 32,000 times 20%, we are going to get the 6,400. So that's for 2005. So we go in there, 31st December 2005, profit and loss 6,400. Then you balance off. In 2005, they didn't sell any asset for you to look at accumulated depreciation and debit it. So 12,800 total, 12,000. 31st December 2005. Balance carried down 12,800. You bring it down to 2006 and you are done with your provision for depreciation. So you see that it's very simple, right? Take your time, calculate the depreciations, credit it, but if in a year they sell an asset, debit with the accumulated depreciation. And that's all. Any question? So I want to believe my students now appreciate this policy of no depreciation in the year of disposal or a full year depreciation in the year of acquisition. Some examiners are very tricky. They can also say full year depreciation in the year of disposal, right? So it doesn't matter the substance, just look at the form. Is it full year or is it no depreciation, and apply it accordingly, whether it is relating to acquisition or disposal. Any questions, my able professors? But you see, one thing about studentship and teachership, if there's any word like that, is when the teacher is solving questions together with the students, it looks smooth. But when the teacher gives an exercise or assignment, all of a sudden, the thing becomes so complex.